Look, I need you to understand something that's happening right now in the silver market, something that hasn't happened in decades, and most people have no idea it's coming. While everyone's been watching gold hit new highs, silver has been quietly setting up for what could be the most explosive move we've seen in our lifetime. I'm talking about a move that could make the 1980s spike look like a warm-up act. Let me show you what I'm seeing. Right now, silver is trading in a range that makes absolutely no sense when you look at the fundamentals. We're seeing the fifth consecutive year of supply deficits. Think about that. 5 years in a row where the world is consuming more silver than it's producing. That's not a temporary imbalance, that's a structural crisis. The Silver Institute just released data showing total demand at over 1.16 billion ounces. But here's where it gets interesting. Industrial demand alone is eating up 58% of all silver production. That's not jewelry. That's not investment. That's actual consumption in solar panels, electric vehicles, 5G infrastructure, and electronics. Silver that's gone forever. It's not coming back to the market. And this industrial demand isn't slowing down. It's accelerating. Every solar panel requires about 20 grams of silver. The solar industry alone consumed over 200 million ounces last year. Electric vehicles use up to 55 grams per vehicle, compared to just 15 to 28 grams in traditional cars. We're in the middle of a massive electrification wave, and silver is the conductor that makes it all possible. But here's what nobody's talking about. The supply side is collapsing. Global silver mine production peaked years ago. We're not finding new deposits fast enough to replace depleting mines. It takes 10 to 15 years to bring a new silver mine online, and we haven't been investing in exploration. The easy silver has been mined. What's left is deeper, lower grade, and more expensive to extract. Most silver comes as a byproduct of copper, lead, and zinc mining, about 70% of it. So when those base metal operations slow down, silver supply gets squeezed even harder. And right now we're seeing exactly that happen. Mexico, the world's largest silver producer, has been dealing with regulatory challenges and declining output. Peru, the second largest, is facing similar issues. These two countries alone account for nearly 40% of global mine supply. When they sneeze, the silver market catches pneumonia. Now let me tell you about something that's been happening quietly in the background. Something that tells me the smart money knows exactly what's coming. Central banks have been accumulating gold at record pace. Everyone knows that. But what they're not advertising is the strategic importance of silver in their calculations. Countries building out renewable energy infrastructure, military technology, and advanced electronics need silver. Lots of it. And they're starting to realize that the market is a lot smaller and tighter than they thought. The entire global silver market is tiny compared to gold. All the silver ever mined throughout human history would fit in a cube about 55 meters on each side. That's it. The gold cube would be much larger. But here's the kicker. Most of that silver is gone, consumed in industrial applications, sitting in landfills, scattered across millions of products that will never be recycled. The above-ground investment silver stockpile? Maybe 1 billion ounces. Sounds like a lot until you realize that's less than 1 year of global demand. And a huge chunk of that is locked up in ETFs, coins, and bars held by investors who aren't selling. Let me paint you a picture of what happened the last time silver really moved. In 1979, silver was trading around $5 an ounce. Within months, it exploded to $50, a 10 times move. But that wasn't driven by industrial demand. That was speculation, the Hunt brothers trying to corner the market, and inflation fears. Today's setup is completely different, and in many ways, much more powerful. Back then, silver didn't have the industrial demand story. It was primarily a monetary metal. Today, it's both. It's a monetary hedge against currency debasement and a critical industrial commodity in a supply crisis. That's a combination we've never seen before. The gold-to-silver ratio has been telling us something important. Historically, this ratio averages around 60 to 1. That means it takes 60 ounces of silver to buy 1 ounce of gold. But we've seen this ratio spike above 120 to 1 in recent years. Right now, it's still elevated compared to historical norms. When this ratio reverts to the mean, and it always does, silver doesn't just catch up to gold. It overshoots, dramatically. We saw it in 2011 when silver hit nearly $50 while gold was around 1,900. We saw it in 1980. We'll see it again. But this time, there's a fundamental difference. The supply deficit is real and growing. The industrial demand is structural, not cyclical. And the investment demand hasn't even really started yet. Think about what happens when the broader investment community wakes up to this story. When pension funds, hedge funds, and retail investors start trying to get exposure to silver. The market is so small that even modest allocation shifts could send prices parabolic. Here's a thought experiment. What if just 1% of global investment portfolios decided to hold 5% in silver? The math doesn't work. There isn't enough silver available at current prices to satisfy that demand. Prices would have to rise dramatically to ration the available supply. And we're starting to see the early signs of this awakening. Silver ETF holdings have been building. Retail demand for coins and bars remains strong despite higher prices. The U.S. Mint has struggled to keep up with American Eagle silver coin demand. Premiums on physical silver have been elevated for years now, sometimes 30 to 40% above spot price. That's not normal. That's a market under stress. The COMEX silver inventories tell an interesting story too. Eligible silver, metal that's available for delivery, has been declining. We're seeing more delivery notices, more physical demand against the paper market. The ratio of paper silver claims to physical silver available is enormous. Some estimates put it at 250 to 1 or higher. What happens when people start standing for delivery, when they want the actual metal instead of paper promises? We've seen glimpses of this stress already, brief moments where the physical market disconnects from the paper price. Those disconnects are going to become more frequent and more severe. Let me tell you about the solar story because this is massive and most people don't understand the scale. The world is committed to a renewable energy transition. Whether you agree with the politics or not, the money is flowing. Trillions of dollars in investment. And solar is the fastest growing segment. China alone is installing solar capacity at a rate that would have seemed impossible just a few years ago. Every megawatt of solar capacity requires silver. There's no substitute that works as well. Scientists have been trying to reduce silver content in solar panels for years, and they've made progress. But even with thrifting, the total amount of silver going into solar keeps rising because installations are growing so fast. Current projections show solar could consume 15 to 20% of annual silver supply within a few years. That's up from about 10% a decade ago. And these projections keep getting revised upward as solar deployment accelerates. Now add in electric vehicles. The EV revolution is real, regardless of the political noise. Major automakers have committed hundreds of billions to electrification. Every EV uses significantly more silver than a traditional car. In the wiring, in the charging infrastructure, in the battery management systems. Global EV sales are growing at 30 to 40% annually. Even if that growth rate slows, we're talking about tens of millions of additional vehicles per year that need silver. That's another 50 to 100 million ounces of annual demand that wasn't there before. Then there's 5G and the broader electronics boom. Silver is the best conductor of electricity and heat. It's irreplaceable in high-performance applications. Every smartphone, every computer, every server, every piece of telecommunications equipment uses silver. As the world becomes more connected and more digital, silver demand from electronics continues to climb. Medical applications are growing too. Silver's antimicrobial properties make it valuable in wound dressings, medical devices, and hospital equipment. This isn't huge in terms of total demand, but it's another steady source of consumption that's growing. All of this industrial demand is price inelastic. These industries need silver. They'll pay what they have to pay. A doubling or tripling of silver prices doesn't stop solar panel production or EV manufacturing. It just gets passed through to end consumers or absorbed in the overall project costs. But here's where it gets really interesting. Let me tell you about what's happening in the investment world. For years, silver has been overlooked. It's been the forgotten metal. Gold gets all the attention. Gold is what central banks buy. Gold is what makes headlines. Silver has been trading like an industrial commodity, not a monetary metal. That's changing. We're seeing a shift in how sophisticated investors view silver. They're starting to understand that silver offers something unique. The monetary properties of gold, combined with the supply-demand dynamics of a critical industrial commodity in deficit. Quick aside here. If you're sitting on a significant retirement account, maybe $100,000 or more, and you're thinking about how to protect your wealth in this environment, I put together a free guide on how gold IRAs work. It's in the description below. Covers the mechanics of getting physical precious metals into your retirement account without triggering taxes or penalties. Worth checking out if that's relevant to your situation. Anyway, back to what's happening in the silver market. The smart money is positioning. We're seeing accumulation patterns in the futures market. Large speculators have been building long positions. Commercial hedgers, who are usually short, have reduced their short positions significantly. That's a bullish configuration. The technical setup is compelling too. Silver has been consolidating in a range, building energy. It's tested resistance multiple times. Each test has been stronger than the last. The base that's forming looks like a launching pad. When silver breaks out of this consolidation, the move is going to be violent. Silver doesn't do anything gradually. It sits quietly for years, then explodes in a matter of months. We saw it in 2010 to 2011. We saw it in the late 1970s. We're about to see it again. But this time, the fundamental backdrop is stronger than it's ever been. This isn't speculation driving the move. It's not a squeeze play. It's basic supply and demand economics playing out in a market that's too small to handle the coming demand surge. Let me tell you what happens when silver really starts moving. First, you get the initial breakout. Silver pushes through resistance, maybe moves 10 to 15% quickly. That gets attention. Momentum traders pile in. The move accelerates. Then the story starts spreading. Financial media picks it up. Silver surges on supply concerns. Industrial demand driving silver to multi-year highs. The narrative builds. Retail investors start paying attention. They see silver moving and they want in. But here's the problem. There isn't enough physical silver to meet sudden surges in retail demand. Premiums explode. Delivery delays extend. People start paying 50%, 60%, even 100% premiums over spot just to get physical metal. That creates a feedback loop. Higher premium signal shortage. Shortage drives more buying. More buying drives prices higher. It becomes self-reinforcing. Meanwhile, the industrial users start panicking. They need silver for production. They can't wait months for delivery. They start buying forward, locking in supply at higher prices. That puts more pressure on the market. Investment funds get involved. They start launching new silver products. Existing silver ETFs see massive inflows. But every ounce that goes into an ETF is an ounce that comes out of available supply. The squeeze intensifies. At some point, the paper market breaks. The disconnect between paper silver and physical silver becomes untenable. People holding paper claims start demanding physical delivery. The COMEX and LBMA face a crisis. They either have to deliver metal they don't have, or they have to settle in cash at much higher prices. This is when silver goes parabolic, when the paper market loses credibility and everyone wants physical metal. We've seen hints of this in other commodities. We saw it in nickel recently when the London Metal Exchange had to halt trading and cancel trades. We saw it in palladium. It can happen in silver, and the impact would be much larger because the silver market is more important and more widely held. Now, I'm not saying this happens overnight. Markets don't move in straight lines. There will be pullbacks, consolidations, moments of doubt. But the overall trajectory is clear. Silver is going significantly higher. The only question is how high and how fast. Let me give you some context on what significantly higher might mean. If silver just returns to its inflation-adjusted high from 1980, we're talking about prices well over $150 per ounce. That's not a prediction. That's just math based on currency debasement over the past 4 decades. If silver catches up to gold based on historical ratios and gold continues higher, we could see silver at $100 to $150 per ounce, even without hitting inflation-adjusted highs. If industrial demand continues growing and supply deficits persist, the market clearing price could be even higher. How high does silver need to go to ration demand, to make recycling economical, to incentivize new mine development? Nobody knows, but it's probably a lot higher than current prices. Some analysts are throwing out numbers like 200, 300, even 500 per ounce in a real supply crisis. Are those numbers realistic? Maybe, maybe not. But they're not crazy when you understand the market dynamics. Here's what I know for certain. Silver at current prices doesn't reflect the reality of the supply-demand situation. It doesn't reflect the industrial demand growth. It doesn't reflect the investment demand that's coming. It doesn't reflect the monetary debasement that's happening globally. The market is mispricing silver, badly. And when markets misprice assets this significantly, the correction is usually swift and dramatic. Think about what's happening in the broader macro environment. Central banks are trapped. They've created so much debt that they can't raise interest rates without breaking something. We saw that recently when the banking system started cracking under the pressure of higher rates. So what do? They pivot. They cut rates. They restart quantitative easing. They print more money. It's the only tool they have left. And every time they do that, it devalues the currency and makes hard assets more valuable. Gold understands this. Gold has been moving higher, making new all-time highs. But silver hasn't participated yet. Not really. It's been lagging, consolidating, building energy. When silver catches up to gold's move, the percentage gains are going to be much larger because silver is starting from a much lower base. The gold-silver ratio is telling us that silver is historically cheap relative to gold. When this ratio normalizes, and it will, silver doesn't just catch up, it overshoots. That's what silver does. It's more volatile than gold. The moves are bigger in both directions. But right now, we're set up for a move higher. The technicals support it. The fundamentals demand it. The macro environment enables it. All the pieces are in place. Let me tell you about the geopolitical angle because this matters too. We're in a world that's fragmenting. The post-World War II order is breaking down. Countries are choosing sides. Trade is being weaponized. Sanctions are being used as tools of foreign policy. And in this environment, countries want hard assets they control. Gold is obvious. Central banks have been buying gold at record pace. But silver is strategic too. It's needed for military applications, for technology, for energy independence. Countries that want to build out renewable energy and reduce dependence on fossil fuels need silver. China understands this. They're the world's largest solar panel manufacturer. They're building out massive renewable energy capacity. They're also accumulating precious metals, not just gold, silver too. They're not advertising it, but the flows are there if you know where to look. Russia, facing sanctions, has been accumulating gold and looking at other hard assets. Countries in the global south are trying to reduce dollar dependence. The BRICS nations are talking about alternative payment systems, potentially backed by commodities. In this environment, silver isn't just an industrial commodity or an investment metal, it's a strategic resource, and strategic resources don't stay cheap when supply is tight and demand is growing. Here's something else to consider. The mining industry is struggling. Energy costs are up. Labor costs are up. Environmental regulations are tighter. Permitting takes longer. The easy deposits are gone. All of this means that the marginal cost of producing silver is rising. Many silver miners aren't profitable at current prices. They're barely breaking even or losing money. That's not sustainable. Either prices need to rise or production needs to fall. Given that demand is growing, production falling would make the supply deficit even worse. So prices have to rise. The market will find an equilibrium. But that equilibrium is at much higher prices than where we are today. The question isn't if silver goes higher. It's when and how much. I've been watching this market for a long time. I've seen silver move before, but I've never seen a setup quite like this. The combination of structural supply deficits, accelerating industrial demand, investment demand awakening, and a macro environment that favors hard assets. It's unprecedented. The last time silver had a major move, in 2010 to 2011, it went from around $17 to nearly $50 in less than a year. That's a 3x move. And that was without the industrial demand story we have today. That was primarily investment demand and inflation fears. Today we have both. We have the investment demand potential and the industrial demand reality. We have supply deficits that are structural, not temporary. We have a market that's smaller and tighter than it was back then. If silver does what it did in 2010 to 2011, but from a higher base and with stronger fundamentals, we're talking about a move that could take silver to $100 or higher, and that might be conservative. But here's what you need to understand. This move, when it comes, is going to be fast. Silver doesn't give you weeks or months to think about it. It moves in days and weeks. By the time the mainstream media is talking about it, by the time your neighbor is asking you about silver, the easy money has already been made. The time to position is before the move. When silver is still consolidating, when people are still skeptical, when the fundamentals are screaming, but the price hasn't reflected it yet. That's where we are right now. Look at what's happening in the physical market. Dealers are reporting strong demand. Premiums are elevated. Delivery times are extended. These are signs of a market under stress. These are signs that physical demand is outstripping readily available supply. The paper market can suppress prices for a while. Futures trading, options, derivatives, they can create the illusion of abundant supply. But eventually, physical reality asserts itself. Eventually, people want the actual metal, not paper promises. And when that happens, the paper market loses control. We're approaching that inflection point. The signs are everywhere if you know what to look for. The supply deficits, the industrial demand growth, the investment demand building, the technical setup, the macro environment, the geopolitical tensions, the mining industry struggles, the physical market stress. All of these factors are converging. And when they fully converge, silver is going to move in a way that surprises everyone. Even people who are bullish on silver are probably underestimating how big this move could be. Because here's the thing about silver. It's not just another commodity. It's not just another investment. It's a unique asset that sits at the intersection of monetary metal and industrial commodity. It has properties that make it irreplaceable in modern technology. And it's in a supply situation that's unprecedented in modern times. 5 consecutive years of supply deficits. Think about what that means. Every year, the world is consuming more silver than it's producing. Every year, the above-ground stockpiles are shrinking. Every year, the market is getting tighter. How long can that continue? Not much longer. Either demand has to fall, or supply has to rise, or prices have to increase dramatically. Demand isn't falling, it's accelerating. Supply can't rise quickly. It takes years to bring new production online. So prices have to rise. It's the only variable that can adjust quickly enough to balance the market. And when prices start rising, that's when things get interesting. Because higher prices bring in more investment demand. More investment demand tightens the market further. Tighter markets drive prices higher. It becomes a self-reinforcing cycle. We've seen this movie before. We know how it ends. Silver goes parabolic, overshoots dramatically, then eventually corrects. But before that correction comes, there's a period where silver just keeps going higher, day after day, week after week, where every pullback is bought, where resistance levels that seemed impossible to break just get blown through. That's the move that's coming. That's what the setup is pointing to. And the people who position before it happens are going to do very well. The people who wait until it's obvious are going to chase prices higher and probably buy near the top. So where does this leave us? Silver is coiled. The fundamentals are the strongest they've been in decades. The technical setup is bullish. The macro environment is supportive. The supply-demand imbalance is real and growing. The investment community is starting to wake up to the story. All the pieces are in place for the biggest move in silver that most of us will see in our lifetimes. Not because of speculation, not because of manipulation or short squeezes, but because of basic supply and demand economics playing out in a market that's too small to handle what's coming. The question isn't whether silver is going higher. The question is whether you're positioned before it happens. Because once this move starts, it's going to be too late to get in at reasonable prices. The premiums will explode. The availability will disappear. The prices will gap higher. This is the opportunity. Right here, right now, while silver is still consolidating. While people are still skeptical. While the fundamentals are screaming but the price hasn't moved yet. The biggest move ever in silver is setting up. The data supports it. The market structure supports it. The macro environment supports it. Everything is aligning. The only question is whether you're going to be positioned when it happens.